Good morning, our dear subscribers. The FutureTrend channel is again with you, and this morning we'd like to concentrate your attention, to focus your attention on slightly longer term perspectives, for example, of major currencies, which we analyze at the moment. Why we decided to do such this morning and not to concentrate on today's economic events, data publications, or kind of new protectionist measures conducting by the United States against its main trading partners, for example, Chinese authorities. We decided to do this because the situation is at the moment is slightly unclear. As you can see, for example, in the euro dollar, let's see the daily chart. In the daily chart of the euro dollar, the one who see that at first glance can tell that we are in the rising uptrend, and he will be absolutely right from this point of view. Now you can see the weekly chart. But if we take into account, for example, the period starting, let's see, from January this year, the end of January, the euro dollar is in a range between the highs of this year of 125.55 and the lows of February around 121.55. So we are in the range of around 4 big figures, and while we are inside of this range, from technical point of view, we could conclude that the pair should be regarded as very neutral. Of course, in this environment, the best kind of trading strategy will be to buy on the dips closer to 122 and to sell the euro dollar closer to 125. At the same time, we also noted a kind of a long-term down, which lies today around 126.30. While below this line, the euro dollar should be treated probably from a longer term perspective negatively, but the situation is very tricky at the moment. Anyway, taking into account the current bullishness of the euro dollar, we can tell that probably in the nearest future this downside trend line will be tested. And what will happen in case of direct break of this line? And what will be the factor for the euro dollar to extend its potential to this area? At the moment it's hard to say because as you know, yesterday the Leakanen words, the words of the ECB's representatives, was rather bearish for the euro pairs. Also, the last portion of economic data coming from the eurozone, I mean inflation data from Spain or imported price, German import prices also falling. Altogether, that didn't bode well for the euro currency. Anyway, the situation is also not so positive for the United States dollar itself, and that's why we'd like to concentrate your attention on this kind of range of 125.50 and 121.50, because we suggest that the break outside of this range could lay the ground for the future more important move in the currency. As regards the dollar yen, here the situation is also bearish for the United States currency, as you can see, because of the protectionist measures conducted by the United States and because of rising risk aversion fears spreading all over the financial markets. And yesterday we could see this again, that Dow Jones index fall more than 1.8%. Altogether, of course, means one factor, means one thing, that the yen will be in strong demand in such kind of environment of rising risk aversion. From this point of view, we still keep our short trade recommendation initiated at 105.20. We are ready to add to our short-term short position around a local short-term downtrend located at 106.05 or 106.10 with a stop above 106.65. To say the truth, there is another important resistance barrier. While below this line, many market participants suggest that the dollar yen should continue its path to the downside. And this level is located here around 107.90, 108. While we are below this line, the pair should be treated negatively. Sterling yesterday, we were rather lucky because, as you know, we have a longer trade recommendation in the pair, and we had a stop loss below 140.65. That's interesting because the bid yesterday was exactly at this level at 140.65, but our stop loss was below that level, so we were lucky to stay with our position. And now we suggest that the cable should continue its current rally, its current bull phase, with which sooner or later should and the level of the highs of 2018 around 143.45 should sooner or later be tested. The dollar Swiss. Here we keep our short recommendation, and we suggest that any kind of risk aversion fears should result in the lower price for this pair. But at the same time, we have to acknowledge the fact that the Swiss franc is looking very cheap at the moment against other major currencies. For example, against the euro or the sterling, for example, you know that sterling Swiss franc is very quietly bullish at the moment. Altogether, that means that the dollar Swiss situation is kind of very unclear at the moment. But we anyway suggest that the pair should resume its underlying bearish trend. And also we can support our view by the fact that we still keep our prices, we still keep the price of dollar Swiss below moving average 200 daily line, which lies today at 0.9658. Also, we still trade below short-term downtrend, which located around 0.9570. While below this line, we still keep our short-term strategy. It was the Future Trend channel with you. See you in our next report regarding euro crosses. It was the Future Trend channel with you.